Differentiation is very important when you are running a business, especially a venture-backed business. Differentiation, barriers to entry, a moat is very important. And I think that there's so many times that companies don't have them. The big barriers to entry, I'd say the biggest thing is probably that deal room. At the end of the day, the only companies that can do what we do, inviting in more than just the borrower as a product that's paid for by mortgage professionals. I think that deal room is very unique and intriguing, and it's what's going to really change the industry.
Welcome to Business Ninjas, brought to you by WriteForMe, where you'll hear from business leaders who are out there growing their business and slaying it every day. Learn from the masters. Let's get started.
Hi, and welcome to another episode of Business Ninjas. I'm here today with Christopher Hussain, founder and CEO at RealKey. How are you today, Christopher?
I'm doing great. How about yourself?
I am very well, thank you. This is a prosperous Monday. I appreciate you spending some time with us on Business Ninjas. Please tell us a bit about yourself and about RealKey.
So my name is Christopher Hussain, CEO and founder of RealKey. Before founding RealKey, I also co-founded another online mortgage brokerage named Syndio. Raised about $50 million with that company. I was a COO and co-founder. Prior to that, I was the #1 mortgage originator in the US. So what that means is that I did more mortgages than anybody else in the US, arguably the world. I was working with about 450 different banks and lenders and credit unions as a broker and a banker. Kind of gave me a unique ability since I was also the only individual in the US to hold a license in each of the 50 states to have originated, processed, and funded in all 50. And so you could kind of say if I couldn't do it alone, nobody could do it. One of the few cross-functional leaders in the space. Obviously, it's a very sales-oriented space, very similar to real estate, which is all related within the ecosystem. And what that means is that I have a unique ability to take what's up here, which is some deep industry knowledge and expertise, and be able to place that to wireframes, project management, product management, and then to work with engineering to have it come out as a workable, usable product while also working on sales automation and marketing, running about everything at the company.
That's a lot to ask. How did you end up licensed to do that in all 50 states? What's the process?
It's time consuming more than anything. Fortunately, there are some states that kind of overlap. I mean, a lot of what you learn from one state passes over to others, but there are for those that are in the states that know it, there's things like what we call community property states. There are states that have particular tax licensing. There are different regulatory, similar to like Texas is one of them. So depending on what state you're in, that's adds or removes the complexities. And in California happens to be where I first got licensed, and that is one of the most heavily licensed states. Most difficult to get licensed in states in the U.S. But yeah, that where that actually came from was my first job in the mortgage and real estate space. One of my first jobs actually was with a company called AmeriQuest. I'm not too fond of that, being that they were part of that whole, housing crisis and a very big part of it, subprime lender. But what was interesting is that if you wanted to, when you were there, you can go through and you can do a loan in any of the states. And so that afforded me the ability when I have a loan, I just have to go out and get the license for it. I would be able to go through and to go do that loan. So once I got out, I said, I can, that's pretty cool. I want to be able to do it on my own because what I noticed during the short time I was there, some states or some counties said across the US were hot while others were cold. And so what was intriguing to me is that I could follow the hot spots if I had the licensing that I needed. So that's where that kind of came from.
That's incredible. And you're a young man, so you started this hustle pretty early in life.
I'm lucky that my dad's originally from Hong Kong. So the last name's Pakistani, Burmese, and Chinese, and then my mom is a mixture of everything else. So maybe giving you too much information here. The 23andMe, but I guess they're going bankrupt. Somebody's going to get that information. But Asian don't raise them a lot. I'm older than I look.
I gotcha. What's the origin story of RealKey? When did you launch the business?
I mean, we launched the business a long time ago. So if you look at the licensing, the company actually was founded back in 2015. That was after my time with Syndio, and between 2015 and late 21, there was a couple pivots. There was also a long period of time where I didn't have any employees. I was playing around, wireframing. I still have the OG, whiteboards and all the different, drawings and mock-ups that I had before. But uh, really, the current existence of the product didn't launch until late 21.
Gotcha. And talk to us about the current instance of that project. What do you do? Who are you serving? What sort of services you providing?
So this is almost like getting into a pitch for it, try to go through and dumb it down as well, because not everybody's in the mortgage space. But at the core of it, it is really, I think the unique piece is that it is the industry's first ever deal room. It's a place where all of the parties, not just what's typically just a mortgage lender, bank, credit union who are paying users, and then the borrower, being the person who's buying the house, that's usually the products that individuals that might be listening are used to interacting with. They go online, create a login, they fill out a loan application, they may run their credit, and then, yeah, they might upload a handful of what we call cookie cutter documents. Your ID, your pay stub, your W-2 or 1099, a tax return, and then insurance. I mean, that's what I call the no dud documents. That's actually called a point of sale. We work with the point of sales. We work also with the core systems that the lenders use, called the loan origination systems. We are neutral, and that's why we're able to work with all the parties, not just the borrower and the lender, because we take the data from the loan application, whether it's from that point of sale, which is filled online, whether it's filled out over the phone, or whether it's just from an existing loan application in a database at a bank, lender, or credit union. And what our AI is able to do is it's able to go through and take any type of loan program from any lender, look at the loan application data, and decide what is a comprehensive requirement of what's needed from not just the borrower and the lender, but title and escrow, insurance, the appraiser, the inspector, the real estate agent, the employer, the HOA. I can go on and on. There's about 15 to 20 parties that most people don't realize are involved in a transaction, because a lot of it happens behind the curtain.
Mhm.
There's also stuff that happens on the other side that they just maybe blocked from their head, but they do realize just how complicated and much of a pain in the ass it was. Now, by having a deal room where everybody can be invited in to meet the requirements list, they're given clear instructions, not guidelines, so they get the right items the first time. More often, we did spend a lot of time finding what I would guess you could call an algorithm to go through and to dumb down guidelines for those outside the industry, keeping the lingo for those inside. But it's standardized. So everybody at the lender using RealKey asks for things the same way. And then once they do upload, we also have a DocAI that we built through going through Google's AI and ML cohort, which was their most competitive cohort they've ever had. There was 12 companies chosen. Extremely competitive, because AI is just the hot thing right now. And we all know Silicon Valley loves to be herd mentality and lemmings and follow each other. And what we built with that DocAI was an amazing ability to recognize any document on upload, whether you're uploading one or 100 or even combined PDFs, and within less than 30 seconds, even split up that PDF into each of the items, attach it to the requirement automatically without any hands touching it, and then review the data, which most companies do just OCR, optical character recognition, where it's like, hey, here is a W-2 and here's the data. Now you create the intelligence. We're like, nah, screw that. Most banks and lenders and credit unions are not really that intelligent, good at engineering. They don't have the know-withal to go through and to do it, nor the resources to go through and to do this, or the time. And so we come out of the box and we are able to then compare the application, all the documents, the guidelines, and then say, here's the next step. Here is exactly what the title escrow should do. Here is the insurance company. And that's if something's triggered. If nothing's done, that's why it's amazing that our product doesn't go through and suggest things that's not necessary. Why flag something and say, oh, everything was great, can you take a look at this? Instead we say, no, thumbs up, move on. We want the end users, whether it is somebody on upload or whether it is a mortgage professional, to know what the next step is and get to that next step so you can close faster. And in many cases, save time, energy, resources, capital, and focus that energy somewhere else. And so that's what we do. It's
That
a long explanation, but I wanted to kind of give all of the background behind it so that the people listening really do understand it in the day. I didn't want to give a 30-second word AI powered mortgage processing platform with a DocAI built by Google's AI model. Like that's my 20-second pitch I give to an investor. And I'd rather people really understand what we do and appreciate what we built.
No, it sounds like an incredible level and amount of due diligence going on beyond a simple application for a line of credit. And you're covering people who haven't done their homework and don't necessarily have their ducks in a row in terms of all those other documents and processes that have to happen if you do get approved or to get approved. No, understood. Do you have competition in this space? Anybody else doing things where AI meets the mortgage landscape quite like you? I mean, what's differentiating you in the marketplace today?
Yeah, I think differentiation is very important when you are running a business, especially a venture-backed business. Differentiation, barriers to entry, a moat is very important. And I think that there's so many times that companies don't have them. I was just on a panel with two very well-known companies in the fintech space. And that was one of the questions, was that about a moat? And it was supposed to be a law, but the answers, I'm going to be honest, I was not personally impressed. I actually know better answers that they could have given. And I think that's something that's interesting, go to market, marketing in general, choosing your language, understanding what your product does and does not do, and where your strengths and weaknesses are. It's just so important. But so many you know heavily funded companies, deep incumbents just don't understand it. So for us, the big barriers to entry, I'd say the biggest thing is probably that deal room. End of the day, the only companies that can do what we do, inviting in more than just a borrower, as a product that's paid for by mortgage professionals. So we get banks, lenders, credit unions pay for us. At the end of the day, if I am, for example, a title escrow company, or I'm an insurance company or a real estate agent, I don't want to log in for B of A, for Wells Fargo, for Guaranteed Rate, for, you name the mortgage company, better.com, whatever it may be. I don't want a different login for each of them, nor if they are all on some of the biggest platforms out there, whether it be a point of sale loan origination system. I don't want to know that when my borrower, my client, is going through a different company that may be on the same system, then they choose somebody that's on a different system, then I have a different login. I think that deal room is very unique and intriguing, and it's what's going to really change the industry. Now, there are other companies doing DocAI, but there's stuff that they're not doing in the DocAI space. Again, I mentioned there's a very big competitor in the space that's raised a substantial amount of money. Granted, it was now 5 years ago they raised that. We were able to build in a year, well, by having a great, amazing team that has deep industry expertise. What's taken them 5 years to build, and we built more features, more products, and a better version of what they did. Their product takes substantially longer to go through to get back to people. Again, it brings back just the data from the document. It doesn't have that extra intelligence later because their product was never built to take in and ingest a loan application. It was never meant to then go through and suggest next steps. It was just meant to say, here's what you uploaded, so you don't have to look at it. That way somebody dumps a bunch of stuff, and then here's the data, and then again, you build the intelligence. So there are competitors in the DocAI space. There are maybe competitors that are doing chat where we have a chat feature, but ours is not using, a chat AI. It's meant to be more like Slack in a sense where you are able to collaborate. Since all the parties are in there, I have a question. I'm in a Zoom meeting with Andrew right now. Last thing I want to do is have a phone call or worry about logging to a different system. Instead, I could just be in there and just say, hey, I've got a quick question. I'm in another meeting. Tell me what to do, and I'll upload the document in just a little bit.
Excellent. No, that's again, you've got such a global perspective and approach. It sounds like all I's are dotted and T's are crossed, which is, hey, it's paramount in this kind of space when people are parting with their W-2s and trying to buy a house. This is serious business that you got to get right the first time. What are the most common problems you're solving for your clients?
I mean, so our clients, again, banks, lenders, credit unions, brokers. End of the day, I mean, definitely on the broker side, more so than maybe the banks or the credit unions, they're underfunded. They don't have the money to afford and new technologies. Most of the technologies don't come out of the box, and that was very important when we built the product. We wanted to be out of the box, ready to use. We wanted to be able to onboard somebody within a phone call.
Hmm.
And what's intriguing about that, I think that's a problem with fintech in general. And this, for those that are listeners that might be in the fintech space and an earlier stage company, your investors want you to go after whales. They want you to go after enterprise. And what they don't realize is the amount of what we call vendor diligence involved. The fact that it's a big distraction to do integrations, to do customization for those clients. Whereas if you build something for maybe individuals, what's also intriguing about that your investors are missing, even those that are the smartest investors, the largest investors out there in the space, they don't understand as well as I'd like them to, is that end of the day, by being able to build a product that gives you traction, consistent traction, that is much better than having one big user that if they leave you, you're screwed as well. So it gives you the diversity. That also helps out with your sales teams, where they have consistent small wins while they are working on those larger wins and enterprise clients. There's a lot of benefits to doing that. Plus, also gives you 100% of the market. So that TAM, SAM, SOM that we always hear about, that the investors are looking for in the decks, the big opportunities. People keep giving us SOMs, but all right, let's really get deep into SOM, because again, people talk about TAM. Okay, real estate industry is massive, trillions and trillions of dollars. SOM says, all right, get down to it. We're in what we call the automated loan processing space, $15 billion just for a small piece of that space. Well, $15 billion if you get all the enterprise clients and you get the SMBs, but the SMBs, the branches, teams, and brokers, the mom and pops, make up almost half of that market.
And the sales cycle has to be exponentially longer to land a big whale than it is the SMB. So um, you got to make a living while you're trying to land the big whales.
Yeah, and that's just to impress the investors. End of the day, we're really here. Our mission's to change the industry, and you don't change an industry by only focusing on the large players in the space. And I think that's just a miss. And a lot of it is funding, knowledge, expertise, having a great engineering team, having a great product design team. I mean, I've got the TurboTax design laid into its principal design strategist. I've got the head of UI UX from Roblox, who was way back when employee number 2. He's got 7 fintech exits behind him. I've got the head of product from eBay and PayPal. I've got other people who are engineers and were product people for, former competitors. I just have so many great, amazing people that we've surrounded ourselves with, a great pedigree of people, but that are all deep in the trenches, mind you. Having a great person who was a director most recently, but has not been in the trenches and is not getting their hands dirty at a startup, it was a mistake that I've seen already made. And I think that's where you say, having a lot of experience and having gone through a lot even though I'm older than I look, at the age I'm at, I think is very beneficial too.
Gotcha. All right, switch gears a little bit. Well, hey, first I got to ask. I mean, this is a tumultuous time in the economy. There's wild variations in interest rates in the last few years. Now building material costs are going up. What's the direct impact on RealKey to this scenario of everybody's waiting for the other shoe to drop kind of thing?
So, I mean, at the end of the day, it's all speculation and speculation. What is everyone's feelings at the moment? That's very, very important. So end of the day, I think that what's beneficial is that last September was definitely the bottom of the market. That was before the first rate cut we've seen in years, after the highest rate increases we've ever seen. And those last few years have been the most challenging years, without a doubt, our industry's ever seen. So many individuals in the space, so many companies in the space, failing, lower sales, everybody's down. And this is after 2 of the most profitable years the industry's ever seen. More business than anybody knew how to deal with. I think what's really intriguing, and this is what's important about when you know the space and you know it's cyclical in nature. The low, what's followed by a low historically, high highs. And I think at the end of the day, what we do know is that you don't innovate in the middle of a high, especially in our industry. It's a sales-oriented industry. If I am feasting at the buffet and food's just consistently coming out, last thing I'm going to want to do is to introduce a new technology or something that's going to get in the way and to distract myself. You implement those technologies and you pave the roads when it's dark. You clean the shark tank between feeding frenzies. You want me to give you sound bites that you're going to use later?
Keep coming with the analogies. I love them. But
Got it.
you
Wait,
clean the shark tank in between feedings.
that's a Christopher Hussain analogy. I've used that a few times, and people do seem to like that because it's great enough. At the end of the day, it really paints the picture. And so the problem that we have, though, in the fintech space, the reason why you go to your banks, lenders, and credit unions and the technology, or your real estate agents, your title escrow, and their technology just sucks, is that to work again with enterprise, to be of enterprise, to meet all their vendor diligence requires a lot of money, a lot of capital. And so that usually means you need investors, and investors, again, follow. They all were investing heavily in fintech in 2020 to 21 and into 22. But as soon as the rates went down, they all pulled out. Now they overvalued, which is what happens when you're following others and you're in a hot space like AI right now. If you're getting into AI right now, you're paying too much. The valuations are ridiculous. I'm seeing companies that have 50,000 ARR and a team of Stanford grads. I'm like, okay, these guys have no, but yeah, great school, but again, they haven't experienced life or running a company, and they're getting extreme valuations. Extreme valuations. Now you take somebody in the real estate mortgage space and you give them an amazing deal room, an amazing team, everything's amazing, and investors are still like, I can't seem to get excited about it. Like, wait, you're excited about it because a company can win pitch competitions very easily and you're selecting that company, but you're not putting your money where your mouth is at the end of the day. And so I think that's the difficulty when it comes to fintech, is that you need to consistently be investing. If you're an investor in fintech, you need to be investing during the high highs, the low lows, and you need to have LPs, meaning the people that give you the money to invest as a VC or angel group or whatever it may be that you are as an investor. And you need to be consistently investing. You need to be consistently backing. If you know that the technology is going to change the industry, I think that's where you invest in. You don't invest in the companies strictly based up to action. Obviously, they need to be able to know how to build. They need to be a quality team, not just a product that's wonderful. They need to be able to execute and just give them the resources, the time they need to build that out. I think that's how you really change industries. At the end of the day, it's just like biosci. We're not going to go through and cure anything. We just cured COVID, not by putting a little bit of money, but putting a lot of money. And look what we accomplished in a short period of time. We can accomplish anything in a short period of time. You take the billionaires of the world, and they are building rockets that are reusable, that can go all the way to Mars. They can do all these amazing things, but that's because of resources and consistent resources.
Yeah, well, consistent resources are required, especially if you're talking about an industry retooling its tech, not in the feasting times, but in the lows of lows. Now you're limiting the number of players in the game who have the war chest to actually reinvest in the process at that point. It definitely cuts the wheat from the chaff, as they say.
Yeah, absolutely. And it definitely, for a company like ours, I mean, to answer your question, during these low lows, we still continue to grow, and we obviously have an innovative product, so we're fortunate there. But we've been raising for a lot longer than I think we should, given how much traction, given everything that's going for us, and the consistent feedback that I've been able to squeeze out of the investors is that, yeah, it's the space that it's hard to get around. And so the question is that at what point do you say, okay, we're well ahead of any, you asked about competitors, barriers to entry modes, we have a lot of them. At what point do we decide, maybe we just pause? Maybe we take a moment to take a deep breath and we wait for that market to return. and perhaps we take our knowledge or experience and help out others in the space that need it, that maybe do have the resources because they were fortunate enough to either get it to during the great times and create a war chest and they haven't spent it all. Maybe they're a larger incumbent that happens to be doing something innovative. Or again, they just happen to have the right connections and they have that Midas touch to bring in investors when others might not be able to do so. So I think that's the consideration there, is that if you're consistently growing, but you're not growing at the pace that really you should be, and you feel like you're, treading water at some point, that might be the right decision. You can get much higher valuations. I think that's the answer to investors right now, is this is an amazing time to invest where you are getting the lowest multiples for an industry, again, that's cyclical, that's about to see a massive upswing. When that's going to be, I don't have a crystal ball for that. But I do have enough knowledge, experience, connections in the space that I do know that there's a lot of potential shoes that can drop that are very likely. And it's not a matter of whether, it's a matter of when we're going to see this big upswing where we're seeing affordability coming down. We're going to see that the private equity, hedge funds, family offices, overseas investors that all put their money, they're the ones who have been buying residential real estate the last 5 to 10 years. It's not individuals that have been buying the properties outside of 2021 over the last 5 to 10 years. There are huge portfolios, and that portfolio doubled, tripled in value over the last 5 to 10 years. At some point, you start seeing, as rates come down, that maybe it's better to put that capital elsewhere. And so trickling down, you're going to see more and more properties come available. You're going to see that rates are coming down as we go through and get recessions, that these tariffs might actually be the trigger, or there might be other causes for that. And so end of the day, where we're at right now is not sustainable. It's all going to have to come down, and it will come down. And when it does, at that point, our industry's got to be poised to take advantage of it. And so, yeah.
The reality is, buy, sell, there's transactions at every turn, and that's where you guys come in. So activity is activity to you, regardless of the state of the market. I mean, for me, I assume that a time like this is heavy real estate investment because it is, I mean, it's built into the name. It's real, right? You're not investing in Bitcoin. You're not throwing money at an AI that may or may not catch on like wildfire. And the stock market is volatile these days. I mean, it's moving by 1,000 points a day on a regular basis in one degree or the other, in one direction or the other. So I would assume your industry is about to be very busy.
Yeah, I mean, at the end of the day, right now, I think that the big value, if I was to say within the ecosystem that you can immediately act on, and investors are, commercial real estate. Commercial real estate is, again, lowest low, but since the new administration took over, the new regime, at the end of the day, there's been a massive push for bringing all of the workers back in the office. And I think there's a lot of companies that are also saying, okay, well, I was paying this much to rent. I could buy this whole building for the amount that I'm renting for. And let me just go through and do that instead. So there's a lot of purchases happening for those that have. It's always whenever those that have the money, bully at the poker table.
Of course.
Bully at the poker table is going to win 9 times out of 10. They have the ability to go through and make big bets, and to, if they made, miss bet, they're going to be okay. So it's not a big deal. They're still going to be the bully at the poker table unless they make a ton of mistakes, and they have those wins that are going to help out to offset that as well.
Understood. Tell me about how you've been telling your story. What role content has played in the growth of RealKey.
I mean, that's a complex question because it's, at the end of the day, we're doing a few things. We're not only trying to obviously sell the product, but we're also trying to go through and to get investors. So, pitch competitions are helpful. That does get the word out there. That gets notoriety. Obviously, there are companies that are at some of these global pitch competitions that we've been fortunate enough to win. So on the pitch side, we have that. Outside of that, in the fintech space, which is not typically free to go through and to pitch, we found that, when we do go to events, usually happy hours, so here's advice, growth hacking in general, tend to be more valuable than paying tens of thousands of dollars for a booth. If we're going to be on stage speaking, that's a different story. Fortunately, having the background I haven't been invited to be on panels or even moderate panels in most cases. But I think thought leadership on the content side, very important. Really, at the end of the day, our users, our potential clients, again, they're going through troubling times. There's things they want to hear about. So it's knowing what they want to hear about versus what we want to tell. I think that is something that a lot of marketing people fail to do. So often do I see these massive budgets and people who are very experienced that I don't know what happened within the time period from when they had started their careers to now. People have gotten just lazy in the marketing community. So often it's these formulaic approaches, it's everything is by the data for the data. And sometimes the data is not everything. It's understanding the psychology of your end client and putting yourself in their shoes. So for us, I can talk about automation, the value of automation all day. I could talk about, collaboration and all of that. But really, I told you, our industry is a sales-oriented industry. Those that control it, that are usually the ones who are the loudest in the room, are going to be the sales people. Those are your mortgage loan MLOs, mortgage loan originators. It's not the processors, the underwriters behind the scenes. It's not, your compliance and regulation. It's not your legal side. That is also a big part of our industry that our product provides value for. So really, we do try to have most of our content, focus on how can we improve sales? How can we improve competition? It's a competitive space being in mortgage. So how can I make that loan originator's manager and their manager's manager, how can I help them differentiate from the person across the street, beat the person across the street? That's what they care about. And that's where a lot of our content starts, but then we get them into it. What we did also intriguingly is that we know at the end of the day, when it comes to sales, what do salespeople complain about the most?
Decent leads.
Yeah, you got exactly the answer. Thank you. Oh yes, it's leads. It's also systems and all this whatnot. So one of the things that we even at RealKey internally, and this is just having been national sales director for the largest brokerage in the U.S. before the housing crisis. So this is before my last company, Syndio, and everything before that. But what I really pulled out of that was, okay, leads are very important. So to have leads, you need content. And to have content, you need to plan that well in advance. So do it on a weekly basis off the cuff in the middle of your busy work week is very difficult. So instead, we built our content to be almost a year out. And that way we can mix it up, we can pick and choose, but we can also find other thought leaders in the space who we think would be great to be on a vlog, a podcast, to even just provide comments on there that we could tag and connect to. And it starts getting into SEO, SEM, it starts getting into, also followers and, interconnection. And then how can we also leverage them and make it worth their time as well, where we can provide them of it. So I'm giving you a lot of marketing ideas here for those in the audience, but really at the end of the day, you should think about all of these things and do it in advance. We focus too much on the product. Your marketing should be well ahead of your first salesperson. Yeah, because that's going to be your first salesperson. Like, hey, I got a product, but wait, I have to create, the presentation, the one pager. I've got to go through and create the content. I've got to know which events to go to and make a list of them. You can do all that in advance, which I think is a great investment.
Hear, hear. You're speaking our language. All right. Look ahead about a year. What are some things you'd like to be celebrating personally and professionally?
Obviously for RealKey, I would love to go through and to celebrate having the round close. This round, we're already at this point profitable. And, even we had a few people who were close to profitability. Adding that on brings us, obviously allows us to add resources and then again, get to profitability because we have a lot of large clients in the pipeline. Other big wins, integrations are a big part of that on the RealKey side. So would love to go through and to have those integrations finalized. Some of them are with the largest loan origination systems and point of sales in the space. They're with, large lenders, even with those that work with the brokers that are bulk of our current existing users. They're paying for the product. So we're working with what we call their TPO portals, meaning the portals that they submit loans to at the Wells Fargo's, B of A's, Chases of the world. So that's what I'd love for that to be. Obviously, there's other feature enhancements, but these are just natural things that are going to happen with the product. Love to be wearing less hats. That's going to be a natural progression of this. Doing things right now, they're not scalable to get to that scalability. Outside that, personally, I tore my ACL last year. I love to get back to playing basketball soon. I had the worst quad atrophy that a very well-known surgeon, UCSF, Severstein, and Stanford as well. So to have them say it's literally the worst quad atrophy they've ever seen,
Oh,
not just one of the worst.
yeah.
And it's been a long path, and I've had a 2-year-old that's about to turn 3, plus raising capital, plus running everything. That was definitely a troubling time. So it's gotten a lot easier since, and fortunately not having to go to physical therapy as often. Everything's on the up and up. She's gotten a lot easier. So personally, that's where I'd love that to be.
Well, I hope you find a beautiful hat rack and that it is full. How's that?
That would be wonderful.
Please tell us, what's your URL? Where can people find RealKey, and what social media outlets are you using as well?
I mean, it's so difficult. It's realkey.com. It's hard to spell RealKey. We didn't take any time whatsoever choosing that name. But I'd say outside of that, to reach out, obviously there's a contact us, but you can also go on LinkedIn. You can find me, Christopher Hussain. Pretty easy to find. I got about 19,000 followers right now. Would love to continue increasing that number. Help out wherever I can, when I can. So just reach out on LinkedIn. That's probably the best thing to do.
Excellent. Christopher Hussain, thank you for spending some time with us on Business Ninjas. All the best to you and yours, and to your quad rehab. That sounds frightening to me. And continued success at RealKey.
Appreciate you as well.
Thank you so much. Be well.